I think this is a really difficult time right now for investors because you kind of have to keep three things in your head at all times. The first thing is that we are having this resurgence, and the data from some of the biggest cities is getting worse and worse. And now out in the suburbs and in some of the states that had not really been touched by this before. So you have to keep that in the back of your head at all times, and maybe it chastens you and it calms you down a bit from reacting to big up days like today. But the second thing is that the deaths don't seem to be correlating at as rapid a clip as the new infection data compared with what we witnessed in March and April. So maybe that means that we're getting better at treating it. Maybe that means that we're doing more testing, and not every case that we see is as severe as we saw in the earlier phase of this wave. There are a lot of different ways to think about that, and I think that's keeping people from panicking over these infection rates being ratcheted higher. But then the third thing is that you have a lot of gigantic universities, pharmaceutical companies, government health agencies taking many, many shots on goal for both treatments and vaccines. And it's hard to get too pessimistic because even if we have to wait months and months and months from now, that news flow is going to continue. And a lot of it has been really positive so far. So I think you have enough in the bear camp, enough in the bull camp to say, okay, it's okay to be optimistic. It's okay to feel like we'll get through this, despite the fact that there are still many avenues of negative news hitting us. And that's what makes it so hard. You cannot tell a uniformly bullish or bearish story right now in your own mind.
Though, Jenny, what Josh just said makes a lot of sense to me as to why the stock market has been able to hold in. Everything he said is true. We are better at treating the virus. It is clear that people aren't as panicked about it as they were from the very beginning, especially in the Northeast, where cases had exploded off the bat. And this progress, unprecedented progress that we've made on a toolbox, so to speak, a vaccine and therapeutic front. And then if you put the backdrop of the Federal Reserve behind all of that, hard to make a negative case, isn't it?
I think it is really hard to make a negative case. So I just finished the first draft of my quarterly letter to clients. And what I did in that was say, it does feel spooky. It does feel scary with virus cases increasing. But let's look at the data. And when you get into the economic data, it is all improved dramatically. We're not back to January highs, but the trends are dramatically improved. So you look at gasoline sales, gasoline demand. You look at retail sales. You look at unemployment. You look at pretty much any housing, auto sales. All of those have showed significant trend improvement over the past quarter. And I think that's incredibly meaningful. Even if there are pauses in reopenings or retractions in reopenings, we're still on a positive trend. So I do think it's hard to make a negative argument. That being said, I have no doubt that there won't be disappointments along the way, and it will be rocky between now and year end. But I think that it'll be positive, trending.
Yeah. John, are we going to make a run at new highs? I mean, we already know about the NASDAQ's run away from everything, but what about the S&P and the Dow?
I think all of them make runs at it. You've heard Tom Lee say it. You've heard Tony Dwyer, and many of us on this same panel have said it. I think, Scott, that given the little bit of Tina that there is in the market, the alternatives are just not there to believe that absent an outright closing of the economy again, which I don't think is in the cards, I think we do make a run at new highs.
Yeah. Jim, you agree with that, Farmer Jim? I mean, the most optimistic of targets are about 3,600, 450 or so points away from that on the S&P. Do you think we can legitimately make a run at new highs, even at a time when the virus is still spreading and spreading wildly in some places?
I think you can make a run at it based on, primarily the positive things that Josh was talking about. I do think, however, that if you are going to make that run, I think you need to see a broadening out of the rally. I mean, it can't just be tech and healthcare that leads it, I don't think anyway. But I got to say, what does worry me, not right today, I think we're going to have a summer rally, but we do have to acknowledge that the polls are looking more like not just Biden wins the presidency, but the Democrats win the Senate. And regardless of your politics, the stock market is not likely to respond positively to that. We still have 4 months to go. I know it's early, but it's now 4 months. It's not 5 months. It's not 6 months. It's, you know, it's creeping up on the horizon. I think the market's going to pay attention to it.